Good morning. Good morning, everyone. I am Bagger Don at StockMarketCaddy.com. Today is Saturday, September 20th at about 9 a.m. I hope you are doing well. I hope you will indulge me these few minutes, for if you do, we very well may change your trading life, and we very well may save you a lot of money, and we very well may help you to make a lot of money. Let me share with you who I am and who I am not. First, who I am not. I am not a broker. I am not a broker. I am not soliciting your funds to manage. It isn't worth it to me. It just isn't. We are a mentor. A mentor for those folks who want to learn how to trade the markets, extracting cash flow from the money flow while minimizing the emotions of fear and greed while maximizing their time and their capital. That said, let's just think about this for a moment as the markets make all-time highs every day. So what does one do? Does one buy and hold? Just simply buy the market and let it run for the next 10 years? Well, a case could be made if you look back on the last 10 to 12 years for having done just that. But the problem is, or the challenge is, one never knows the future. We never know precisely on any stock or on any market, on any time frame, precisely when the market is going to turn. Nobody can know that. Please understand that. And we trade the markets every day and have been doing so for decades. So if that's the case, Don, what exactly is it you are doing? First, markets have a tendency, just as fluid dynamics says, with momentum. When something is in motion, it has a tendency to stay in motion and in the direction of which it is moving. So something in motion has a tendency to stay in motion and in direction of which it is moving. However, when momentum begins to wane, momentum can sometimes indicate either a slowing of that direction or a possible change to that direction. That is called divergence of momentum. And there are tools available to us to interpret for that. We don't get it right every single time. That's why it's critical as a trader to have excellent money management tools, experience to take such bets. For the most part, though, what we are doing as traders intraday, daily, and even longer is letting the market make its turn and then wait patiently and play that turn and then wait patiently for it to turn the other way. And we have wonderful tools for ensuring that the market has in fact made the turn. We're not guessing at it, but we don't get it right all the time. Nobody does. We can give you the education, we can give you the tools. We cannot give you experience and thus confidence. That is an acquired skill set. So trading in the markets is something that you must love and want to do and have a passion for doing. That said, let's take a look at this tool, SMC Swing Machine Plus. We'll leave the skew in the VIX. We'll leave the skew alone for today. But we will look at the VIX, the fair gauge. Swing Machine told us 90 days ago that the VIX was headed down. The difference between the entry price, 28.44, and where it is now, 17.70, is a 37% drop in volatility or in fear. One could have made money on that, but we'll save that for another day. The important takeaway is, if you had this tool on your desktop on May 13th, and today is September 20th, you would have known that there was a very strong bias for the market to do what? To go up. To go up. Now, once it makes its turn and starts to go up, nobody knows, including us, how high it will go. Or, when it's going down, how low something will go. Nobody knows that. We just simply wait for the signals to confirm to us. So if you knew back on May 13th, when the ES futures contract went long 4 days previous, you may have waited a few days. You may have waited because it went long on the 7th. You may have waited until the 13th. That would have been fine. You would be up over one mini contract comfortably over 40 grand. If you did the same thing with the NQ, if you went on the 2nd, you'd be up 84 grand, but you'd be up quite a bit, probably over 75 some odd grand. The Russell, 16 grand. And here's the VIX again, it's repeated in here. And here's the Dow. If you want to get inside, you have the time, you have the skill set, and you want to get inside the daily trader and be a little bit more active, you could have gone down to a 240 minute. And you can see the signals here and the corresponding amount of money. And if you want to drop down to a 60 minute and hourly, that doesn't mean you'll be trading every day, but you might want to be using options. You can see what it has done here. Folks, if you are making decisions based on the money, you think this game is easy, you think all you have to do is buy and sell and push that little button when something comes across on CNBC or when the big one comes, I think you may be sorely disappointed. That is not what we're doing as active traders. It really doesn't matter to us how high or how low a market goes. When it is doing what it's doing, we are most certainly looking for the dissipation of that momentum up. And we do think we're getting close. But it has not made the turn yet. And when it does make the turn, we will see it. Our members will see it. And no one will know, including us, how low it will go. It may stick around for 5 days, 20 days. It might stick around for 90 days. I am Bagger Don. This is StockMarketCaddy.com. If you want to learn to trade the markets mechanically, robot assisted, and get a glimpse of what it is we're doing, a glimpse. We cannot know your level of experience coming in. So it may not be possible to play a great game of golf with just 3 or 4 weeks of instruction? Probably not likely. But if you've been out there and you've been trading, it may be that you are just a few short weeks away from trading or from changing your trading life. Feel free to give me a shout. I can be reached any day from 9 a.m. to 9 p.m. at 813-758-8263. We got a few more spots for Q School this year. Just a few. Let us know. Thanks.